Welcome to 5 and 5 with Miller and Mango, your go-to source for all things finance with a twist of culture infused into every episode. Join your hosts, seasoned financial professional Miller and marketing maverick Mango, as they discuss 5 of the latest market and cultural trends and help you instill common sense into the ever-changing landscape of finance, all within 5 minutes. It's time to dive into the numbers, unravel market mysteries, and discover the strategies that matter. Welcome to 5 and 5 with Miller and Mango.
Hello and welcome back to 5 and 5 with Miller and Mango. I'm your host, Mike Manganella, with my co-host, Miller Hoffman.
Good morning, Mango. Happy summer.
This is episode 20. 4 more to make a full season, then we roll into season 2.
Here we go. And 5 times 5 is 25. So we're almost there.
Look at that. All right, let's start. Recently came out of the news, just like the Big Short. I'm hearing rumors out there that zero down mortgages are coming back.
Right. Yep.
For the people who have not seen The Big Short, excellent movie. What does that mean?
Big Short is excellent movie. I love it, but they take a lot of complex subjects and topics and try to make it understandable, even for people like myself who've studied it and work in the industry. There was a lot going on, a lot of not so great things in 2008. But yet, so the zero money down is what's coming back. So I think the idea is to try to get more people involved and encourage home ownership, which has really been under fire. It seems like as of late, especially for some of the younger generations, and that's a podcast topic all in of itself. But a couple hot takes here.
Okay.
The whole debacle around home ownership and complaining about home prices or lack of supply or where interest rates are, I'm one in the camp that you need to align your expectations and rid yourself of the entitlement that we've really taught ourselves, for better or for worse, in this country, that home ownership is part of the American dream. Mm-hmm. Whether it is or it isn't is something for you to define. But this idea of I pay X amount in rent and that's what I could pay in a mortgage is such a terrible, in my opinion, approach to if you deserve or should have access to a home. I mean, this is not a matter of if you could just afford the monthly payment. A home, it can be such a large risk or a threat to your bottom line or ability to stay solvent. So I think it's just a continuation, Mango, of our credit culture, right? The article states you can borrow money technically for a down payment that's zero interest. I mean, at the end of the day, you're still borrowing the money. Mm-hmm. You are still enslaved to a lender, a bank, lending company, you name it, in some way, shape, or form. And I think it encourages a lot of people to go buy a home that may not be ready. You have to be prepared for air conditioners going out, hailstorms, 2 of which I am currently dealing with right now. And that is above and beyond what my monthly mortgage payment looks like on both properties. So, bit of a hot take. I'm getting on my soapbox here a bit. But
we saw this end of last time. So I'm just interested why. I understand why they're bringing it back. It seems odd. We're in a world of inflation and money is tough. Why they would do it now? But I'm with you. Cautionary tale. Just be worrisome of what you asked for.
Yeah. I mean, that was one of the main driving forces in 2008, right? Yeah. Everyone was buying a home, multiple homes, vacation homes. I mean, that was part of the greed and the excess that really led to the failure that we can all look back and say hindsight's 2020. So,
talking about failures, something that shook the New York Stock Exchange earlier this week was a technical issue that halted trading from some major stocks and caused Berkshire Hathaway to be down 99.97, almost 100%. It's been resolved, but would love for our people that own stock, what happens to that?
Yeah, I'm sure Mr. Warren Buffett and company weren't super happy to see his company down 99% at one time. But Mango, considering how technical and electronic in nature our markets are, these glitches have happened before and they will certainly continue to happen. But I think it is kind of naturally causes some people to fret here when you see how quickly a position that you have or, if that's a large component of your net worth. I mean, you could have seen your net worth dive pretty deep pretty quickly. But I think, again, that's a testament just to how online our trading habits are here in the United States and abroad. But consider this, though, for people who say, I wish it could just go back to paper systems or something more secure. I'd argue it's more secure for your trading activity to be done online, much better.
I could see that.
Electronic paper trail, let's say. But I looked into the average daily volume of just the New York Stock Exchange. When I say volume, I mean transactions occurring, buying, selling, trading back and forth. You got it. You're looking at, on average, 38 million in volume per day.
Yeah.
If you want to be in charge of counting papers and ensuring that accuracy is held to a high standard for 38 million on average daily volume, be my guest. This is just a fact of where we are right now. It has to be online or have a technical backing. So expect some glitches to come with that. Curious to get your thoughts.
No, I mean, I think I'm with you. I think you have to kind of trust the system. I mean, I can look at charging stuff on a credit card, trusting that if there are errors or scams, your credit card company will reimburse you and take care of it, right? So you have to trust that what you're putting out, that there's coverage on it. So I always look at it from, I'm not following it that closely on a day-to-day basis. So I wouldn't be concerned unless I had a huge holding, and then you would trust that they would fix the problem, which they did.
For sure. Yep. Exactly.
Well, talking about the stock exchange, most recently, about a day ago, Texas came out they are creating a new national stock exchange form called the TXSE Group. They just registered with the U.S. Securities and Exchange Commission, and is gonna, I don't know if I'm not going to say it's gonna go at the New York Stock Exchange or Wall Street, but be competitive. Mm-hmm. What does this actually mean? Is this the first of its kind?
Not the first of its kind here, but it seems like Texas has continued to be on the warpath here for business, right? How many public companies has Texas attracted? I mean, the figureheads, Elon Musk and Tesla just naturally comes to mind
Joe
for
Rogan.
me, but and Joe Rogan. But it seems like, I mean, Texas and a handful of the southeastern states seem to be really competitive with trying to attract businesses and large businesses at that to join. But Mike, I'm a huge fan of competition. I mean, if there can be other options for companies to use to raise capital, which I know we'll get to in a bit. What does it mean to raise capital or offer stock, own stock, that kind of thing. But this is good news for me. I like to see other options, and choice is such a bedrock of capitalism. But maybe more importantly, consent. So we have to have choice, and then we have to be able to consent to make a choice. Anything aside from that is not true capitalism, I'd say, and this is just another extension of having some choices as a consumer. Here's the part that makes me feel a little uneasy, though. And this isn't just about the Texas action here. A lot of the stock exchanges are public companies in and of themselves.
Mm-hmm. Oh, that's
so
interesting.
There's a clear profit motivation. They are in business to make money, and they're going to charge consumers appropriately. But it kind of gives me a weird feeling, like how some of the credit agencies are also public. Yeah. So it's fair. I can conceptually get it, but it just makes me feel a little uneasy knowing that stock exchanges supposed to be facilitating transactions, trying to be as fair, seamless as possible for that to occur, but there's a clear profit motivation in there as well.
There always is. I mean, everybody's a capitalist at heart, especially the companies that are backing it. They want to make money, so there is benefit to that. And I'm not going to go too deep into it. It seems like what Texas is doing is might be wanting to make it a little niche outside of the U.S. for themselves as well.
True. Yeah, that's part of that. Part of the choice, right?
Yeah.
People vote with their wallets a lot of times too.
All right, a little fun. We are, as we mentioned before, it's early June. It's getting sweltering hot here in North Carolina. Some people like to get out of the heat and see the movies. I'm not sure Miller's a big movie goer.
Nope.
But wanted to throw a love little these quizzes at you. Can you name me the top 5 grossing summer box office blockbusters ever? One of them I'll say was last year. No, one it was 2 years ago.
It seems like one of the biggest movies to come out relatively recently was the Top Gun.
That's it.
Second
Top Gun Maverick, number 1.
But
it
aside
made
from that,
$701 million, which actually was 20% of its total overall in just that one summer.
Wow.
Number 2 was Jurassic World in 2017. Number 3 was The Avengers in 2012. That was 12 years ago.
Wow.
Number 4 was actually last year, Barbie, which I know was a big fan favorite, a lot of people. And number 5 was Incredibles 2, which I found kind of interesting. Looking back at anything in the 90s, you had Star Wars Episode 1 in 1999, and then Jurassic Park in 1993. All blockbuster movies, all fun for the family, mostly shoot 'em ups.
That's right,
None of the good movies really come out during the summer, more just like, have fun and go to movies with your family.
There you go.
But yeah, I love a good movie, a blockbuster movie.
Yeah, and you beat the heat. Get to go into a dark, cool movie theater with some popcorn and refreshments. Get out of the sun a little bit.
Yeah,
not bad.
So I thought that was fun looking back at. All right, number 5. Explain it to me like a 4th grader, which 4th grader will become 5th grader very soon.
So we'll have to change. Explain it to me.
Make it a little harder next
Are
time.
you smarter than a 5th grader?
No trademarks on that one. So we've had this question a bunch from clients and people around us. So when you, as a person, actually purchase a stock, what does that mean? What does that physically mean to somebody?
Yeah, I think it's something a lot of people just expect. I mean, we hear all the time, you should own stock or go buy stock or Amazon stock's doing great. But I love the question, what does it actually mean? Mango, I look at it as, being a part owner in a business, or at least an investor in the business. And I think some of the best investors of all time really approach their moves as such. They're looking to buy portions of these companies, although if you just buy a handful of shares, you own very, very, very little. But technically, shares or shares of stock are reflections of ownership stake, which means two main things. We enjoy the upside when the company or the stock itself does really well, which I think is virtually every investor's hope. But we also suffer when the stock does not do so well, whether it's year to year or we hold the same stock for quite a while that just seems to dwindle down in share value. So it's a reflection of ownership, which I think is important to highlight. This is one of the ways companies raise capital to continue their operations. Although the shares of stock you're trading on the stock exchanges now are not directly doing business with Walmart or Tesla, that kind of thing.
Yeah.
This was one of the ways that Walmart initially sold stock publicly to investors and raised a boatload of capital as a result of that to continue operations, building new stores, hiring, expanding to new markets, that kind of thing. But two main ways that owning shares of stock benefits you. One, you see an increase in the share price. If I buy Walmart for $10 and it has a great year and now it's worth $15, I have an unrealized gain of $5 per share. Congratulations, great year. Walmart may also pay me a dividend, which is a nice little upside of being an owner in Walmart. Has nothing to do, well, a little bit, but really nothing to do with what the actual share price is. It's more so a cherry on top or an incentive for you to own Walmart stock and maybe not Target stock, for example. So two main ways. We can either see the share price increase or the company itself could pay us a dividend. Some companies do, some companies do not.
Yeah.
So something to consider as you go buy individual stock as a whole.
And you talked to me recently. I think you asked clients when they come in about owning stocks, what were you saying to me? I said, what type of stocks they want to buy, what kind of companies you want to buy in, what's important to you, right?
Yeah,
I love that advice.
Yeah, if you were to ask, I think the average person, even myself, hey, what do you value? If we're going to go out and buy a company, virtually everyone says, hey, I want a company that's doing well. It's making profit. It's going up. The truth of the matter, Mango, is if we look at the actual accounting documents, a lot of the big name companies that you and I interact with every day technically are not profitable on paper. Now, their revenue may be hundreds of millions, billions of dollars in revenue, meaning size and scale is certainly there. And a lot of these companies are spending all of their money on research and development or continuing to improve operations or hiring more talented people. So the idea of profitability really doesn't hold much water if we compare that to, some of the really big name brands like Tesla, for example, the largest car company on earth from a valuation perspective, has really struggled to be profitable on paper. So is that an appropriate benchmark for us to use? Maybe, maybe not. It's what you value as an investor and your criteria for buying or selling a particular stock.
Good advice there.
Yeah.
All right. Well, that's all we have for you today. Happy June. Stay cool out there, and we will be back on in 2 weeks for episode 21. Take care.
TradeWinds LLC is an investment advisory firm that is registered with the Securities Exchange Commission. Registration does not imply a certain level of skill or training. TradeWinds will not accept trade offers online, and any such request, orders, or instructions that you send will not be accepted and will not be processed. This presentation has been provided for informational purposes only and is not intended as legal, tax, or investment advice or a recommendation of any particular security or strategy. The investment strategy and themes discussed herein may be unsuitable for investors depending on their specific investment objectives and financial situation. Information obtained from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the author based on conditions at the time of the publication and are subject to change without notice. Past performance is not indicative of future results.